right, good afternoon, everybody. Hey, and how are you? Scott Hinson with LPT Realty. Today, we're welcoming John Dillon. He is a preferred lender with us at CMG Financial, CMG Home Loans. John, I'll let you get the name right there with me because I know there's the corporate thing.
We're in a transition period right now. We're going from CMG Financial to CMG Home Loans so that people know what we're doing now, I think.
Hey, awesome. Good deal. So folks, I don't know, a month or so ago, I lose track of time. We did a video on the Homefundit program, and this is through CMG. And I had promised at the time that we were going to come back and really dig in and explain it. So John's here today to do that. We're going to talk about a couple other different things, and we may break this out into multiple videos across the timeline. But anyway, we want to give you some help and learn about your financing options. So John, welcome. Glad you're here today.
Thanks for having me, Scott. I guess you want me to just jump right in?
Yeah, let's talk about the Homefundit, what it is for you folks out there thinking about getting married. You need to listen to this, or you don't have to be getting married, but it's a great little thing there. It's more than just for folks getting married. You can be single, all that stuff. But I'm going to hush because John's going to have to correct me on 100 things here. So yeah, let's talk about Homefundit first.
You pretty much got it figured out, Scott. Basically, what Homefundit is it's the first crowdsourcing down payment funds platform in the mortgage industry. CMG figured out a way to make it compliant. And what it is basically we are going to set up an account for you or for our clients where anybody who wants to donate money to help you buy a house can do so up to $5,000 per person. I know if you can get somebody to send you $5,000, that is awesome. I don't anticipate too many of those donations, but what it is it's an accumulation of small donations that can really help you purchase your first home. We will match up to $2,000 or 1% of your loan amount for the program. To your point, it's an awesome idea if you are getting married and you have a registry and that toaster oven for $65 sounds cool, but $65 towards a house, which in effect could be $130 when we match it, could go a lot further for you in the long run. That's not the only source that you can get these funds from, though. If you're in a church group or any kind of extracurricular activities that people are helping people out, it's a great way to tap into those people. And maybe one day they're helping you buy your house, and another day when you have equity in your house that you've purchased, you can you can return the favor and help somebody else out down the road.
Let's go back to that toaster oven if we could for a second. Some folks may just want to get the bride and the groom to be a toaster oven, and that's wonderful. We need appliances. But so if the couple, if they have a link, there's a way that folks can shop through them and get them that toaster oven and still get some credits. Is that right?
Absolutely. So I can't begin to tell you all of the online stores that it's called Upit is the name of the, I guess, platform or whatever that helps us do this. But up to 7.5% of online purchases when using that promo code through Upit will go towards that campaign, your GoFundMe campaign. So just to make things easy, somebody buys you something for $100 through Upit and you get 7.5%. That's $7.50 that did not cost anybody any additional money. And that $7.50 will go towards your campaign to help you purchase a home. And, it's not a lot, but you get the word out there and, that those amounts can start adding up for you big time.
Great. All right. So you and I have talked, and typically this program, I think your word might be the kind of a long play or something that unless you've got a handful of those $5,000 people that's ready to roll real quick, this might be something if you're getting married or plans 6-9 months down the road, might have an opportunity to be real effective. So in the shorter term, what might be your suggestion for someone? I want a house and I need some down payment resources.
So, real quick, to your point, if you're an 18-year-old graduating high school and home ownership is something that you want to accomplish soon, the funds aren't going anywhere. People can give you high school graduation gifts towards HomeFundit, hypothetically. And by the time you turn 25, all of a sudden you've got 7 years of people that you said, I don't really care about the cup with my monogram on it or whatnot. Like, how about $15 or $20 towards my HomeFundit? It's not going to do me much good now, but in 7 years from now, when I graduate college, or I'm 25 years old and I'm starting to make moves, now all of a sudden I've got 7 years into this HomeFundit program. And at that point, there's no telling how much money's been earned in it. But as far as shorter term loan options, we do North Carolina Housing, $15,000 down payment assistance. It's an awesome program for those that qualify. I'm a huge proponent of USDA. That's a 0% down option. If you're in a census tract or an area that is USDA eligible, that can be coupled with our Borrow Smart program. If you are under 50% of the area median income, we will give you $2,500 to help you buy a house. If you are under 100% area median income, we'll give you $1,000, or we can get you $1,000. Those are two great options coupled with USDA that will absolutely help pay for some closing costs. We're still in a point now where if houses have sat on the market for a little bit, you as the realtor can negotiate for some seller credit. And if we can get seller credit coupled with the Borrow Smart, that's another option for us. So those are a couple there. We also have an FHA option that's 100% financed. We can actually do a 3.5% down loan with 5% in a second mortgage that will go towards closing cost, that will go towards down payment and closing costs. So it's 5% on a 3.5%. If funds are something that are keeping you from buying a house, that's another great option for you. And those are the three.
I'm sorry, but what I'm hearing from you is there are options, not just one or two, but you've got options available. So it's important then for the prospective home buyer to get in touch with you early and let you figure out all the options that are available to them. And I mean, in theory, I guess they could go somewhere and they think they got to do the 3%, and that's just what they have in their mind. But you may have some ideas that they haven't thought about, didn't think was available. So is that something that just as a normal course of your business, you intake a potential new client or prospective borrow and look and kind of lay it all out there for them?
Absolutely. My job is to put all of the options in front of the client and basically help them make an educated decision that's best for them. I do this every day. So when I start going into numbers, sometimes it comes off, you're like, what the heck is he talking about? What I can guarantee you is that I'm going to make sure that I'm going to put you in the best loan program possible for you and give you all of your options to make an educated decision. And we do have people who say you need 20% down, 10% down, 5% down, all people who say all of those things. That is not the case. You can buy a home with very little money down. I don't want anybody to be over leveraged or buy more than they can afford. But ultimately, if I can get you approved for the home, my job is just to make sure that you know what the numbers are and you understand what you're getting yourself into. And if you can make it work, then let's make it work, because homes are continuing to go up in value. And with the limited supply on the market, there's going to be increased demand. When rates come down, it's going to even be more so a thing. So, getting in now, I think, is a great idea.
Well, folks, a couple of things here, kind of going back to the Home Funded program. There will be links in the description of how you can sign for free. It's you can sign up for free, right?
Absolutely.
Okay, we're going to have that link in there for you. We're also going to have a link so you can get directly with John, get your pre-approval, and you can talk to him about all the different options that you might have so that you can get a house.
One caveat that I will say that I didn't mention was HomeFundit is a program that you must start before you go under contract. It's hard to raise the funds anyways, but if you know that you're getting a gift from mom or dad for $5,000, there's no reason not to get a HomeFundit started before then, because we're going to match up to 1% or $2,000, up to $2,000, but no more than 1% of the loan amount. So, that's something that you should think about beforehand. Get in the system so that when you do pull the trigger on a contract and you go under contract, that gift can go towards your down payment, and it can be matched by us. So
we may be a little bit in the back part of the train here because graduations are imminent here in high school, but you brought up a great point. So maybe we won't have a ton of high school graduates tuning into this, but if there's mom and dads out there and you've got sons, daughters, nieces, nephews graduating, tell them about this. Or John, is it possible that they could set up the account for them, or is that something that the person actually has to do on their own initially?
It's probably going to have some personal information tied to it.
Okay.
I would suggest that they just go ahead and do it, but parents out there watching this just need to educate their children. When I was 18 years old, I wasn't watching home buying videos. It was the furthest
videos.
Thing but I'll tell you this much, knowing what I know now, when I have kids, I'm going to educate them on it. And I think that's something that parents should do that are watching this for themselves or for their children. Go ahead and get involved, get your kids involved, let them know what the beauty of home ownership is all about, and what this program can do for them in the long run.
Awesome. John, thanks for that. Folks, reach out to us for the Home Funded program to get more information and for all the other programs. Again, there will be a link to John and to get you pre-qualified for all the different loan programs. We're going to switch gears a little bit, John, if that's okay, unless you've got something to add to that.
Absolutely. No, let's go.
You touched on first-time home buyers a little bit. We can, maybe over time pull that out a little bit more and do some more. But how about let's just switch gears totally here, and maybe you're all-in-one for a different segment.
Sure. The all-in-one, I actually had a conversation with a client about it today. And the all-in-one, for the right client, is the absolute best loan program on the market, period, end of story. It's the best one that we offer. It's the best one that I've heard anybody offering. And what the all-in-one is the all-in-one ties in all of your finances that revolve through the equity that you have in your house. What it is, it's a first lien home equity line. It's an interest-only loan. And what it does is when you get paid, you can take your paychecks and you deposit them into this sweep away checking account. So let's say you have a $300,000 mortgage balance and you make $15,000 a month. That money, when you deposit into the account, is going to sweep away and immediately pay down the principal in your home. It's the only principal first loan program on the market that I've ever heard of. And what that means is that when you do that over time, you're compounding how much more you're paying down in principal and how much less you're paying in interest. Because it's month to month, it's essentially re-amortizing the loan every single month. So after you pay down $15,000 into your mortgage balance and your new balance is $285, you might have $5,000 worth of expenses and it goes back up to $290. But the next month, when you get paid again, now all of a sudden you're down to $275. You pay $5,000 more in bills and whatnot. you're at 280. You paid 15,000 down. Again, you're at 265, and over 3 months, hypothetically speaking, you've paid $35,000 off of the principal that you own in your home. It's a revolutionary program. It is not meant for everybody. People who are, trying to get by every month, it's not something that I would suggest, because it's for people who have a lot of additional money that they're saving up month over month. They might be accruing, $30,000 or $40,000 in a checking account that's earning no interest, whereas that money could be used to pay down their principal balance on their mortgage. And now all of a sudden, they're saving whatever the interest rate is. It's a month-to-month adjustable. So it's
if you have say self-employed, they've got a business that cash flows great, it's stable, and even though those expenses each month come through, they're managed well. Is that something that does this have to be personal, or can it be split out as business, personal? Does any of that impact this?
Absolutely. So it's great for people who are self-employed. One of the biggest reasons is self-employed people have to do their own taxes. They get paid a 1099 for the most part, and then they're taxed at the end of the year. And what you're doing is you're taking all of that money that you have available that you're making, and you're paying down the principal balance. You have access with a checkbook and with a debit card. At any given moment, you could go to the grocery store and swipe that debit card and pay with the equity you have in your house. Obviously, it takes a responsible person, but the beauty of it is that, you might not get paid. You might not get paid 1 month, and all it's going to do is add that interest-only payment to it. You don't have to worry about going into default if you can't make a payment 1 month. If you make, if you get paid once every 3 months, but it's a large sum of money, you can take that whole amount and pay down significantly more than what you've owed on your mortgage for those interest-only payments. And then at the end of the year, the tax benefit is that you've built up all of this equity in your home. You can pay out your taxes or your insurance because they're not escrowed through the program, and at one time use the equity that you've gained in your house to pay for those things off. And it just, it's 3 steps forward and 1 step back, essentially.
So I'm hearing that the timeline to potentially pay off one's mortgage in this program might be significantly shorter than just the traditional 30-year mortgage.
Absolutely. It's going to be significantly fat for the right client. And I'll flat out tell people, at a certain point, this might be right for you. Right now, I don't believe that it is right for you. But with all that said, for the right client, I've seen somebody that could pay off a $750,000 house in 1.5 years.
How many?
And that's in 1.5 years.
Oh my gosh.
And what that's doing is now all of a sudden they're sitting on an equity line for about $600,000 that they can use whenever they would like, but all they're getting charged is $250 a year to keep the account open. And now they have this equity line, all this financial freedom. If they wanted to go buy an investment property, they could pay it for an investment property with cash, with the equity that they have in their home, and rinse and repeat it.
That's why me as a realtor am wanting to talk about this program, because that gives the option for people to go out and get that second home, vacation home, investment properties. You can come talk to me. But to start this process, you need to go see John. You need to talk to John and let him, again, lay it all out, discuss your options. And but that's exciting. Just incredible having that tool available. Why haven't we heard about that kind of loan program before?
It's relatively new, and I'll be honest, CMG it is CMG's product. Other banks don't really have it. So I'm sure that a ton of people that watch this video are going to go, who the hell is CMG? And that's part of the same reason why they haven't heard of the all-in-one. It's all about us getting out there and, telling the world about this product. And that's what I'm trying to do. That's why I'm on this call with you. That's why we met. In part, I know HomeFundit was a huge deal as well, and is a huge deal. But my job as a loan originator is to let people know what options are out there. And so the more of these that I do, the more referrals that I get from the people whose loans I've done with this product. They're like, this thing is awesome. It is saving us so much in interest. We have so much equity in our home. You should take a look at it. And I would say that I get more referrals for this program from people who, just came to me to buy a house. And I go, this is the right program for you. And they end up going, they tell all their friends about it, and they're refinancing into it. They're buying homes with it. And that's how they're really realizing, what it's all about. So
awesome. Folks, John and I are going to try to get together from time to time. And again, we'll rehash programs. Unless there's something that you really want to add to what we've already talked about, John, just in a few seconds. Folks, we hear news from New York, Los Angeles, Chicago, Miami, hubs. I've said it before, real estate is very local. John, in just a few seconds, what's your take on the market today, and how do you feel about things?
My take is that I do a lot of reading from people that are a lot smarter than I am, and they are optimistic about what's happening. Fannie Mae and Freddie Mac, Moody's, a lot of people, a lot of big names that are, have a lot more data at hand than I do, are saying that by the end of this year, we could see rates, around 5.5%, maybe even a little bit lower than that. And that kind of brings me to one other thing that I wanted to mention, and that's our rate rebound program. Rates are high right now. Demand is not quite as high as it has been because people are scared of rates. And what we've been able to do at CMG is use this rate rebound program, which is basically a buy now and refinance later program. It's an all lender paid expenses refinance, comes with anybody who purchases in 2023. And we'll give a $1,000 credit to offset our attorney fees, or the attorney fees associated with the refinance. And what that does is, I don't want anybody to enter into, a payment that they can't make, banking on things to the market to do one thing or another. But if you can at least stomach the pain and you're comfortable with where the payment is now, just know that that refinance is available. And when the rates do come down, I know they will at some point, they have to. When that happens, it's going to be shark infested waters again. High due diligence fees are going to be charged. People are going to be going over ask, and everybody's going to be jumping in at the same time. This program allows you to get houses now while rates are a little bit higher, and know that you can refinance later out of them, which I think is, critical right now, and save you a lot of heartache when you really try to buy a house when everybody else is thinking the same thing.
Again, resources, folks. We don't know what tomorrow brings, but I think John and I share some optimism. But I think it's critical that you not let tough news coming from somewhere else impact the decisions that you want to make today to live the life that you want to live. So again, in the links, we'll get you a way to get in contact with John. Come through me. We hope you'll do that. John, thanks for your time today, brother.
Scott, thank you so much for having me on. I look forward to doing this again with you here soon.
Awesome. Take care, folks.